Retired Revenue Officer McGarry here. We are talking tax smart. So in my last video, we left with the subject of understanding what it means to deal with the philosophy behind the Internal Revenue. If you're going to play, you got to pay. And we ended by looking at the issue of the individual taxpayer. So let me kind of pick up where we left off in this, the second part of that video and understanding, and transition to business entities. So the personal entity, first of all entities that the Internal Revenue deals with are assigned an identification number. It's called an EIN, or the Employer Identification Number. In the case of an individual, it is their Social Security number. So when you file your tax return, you are going to be filing using your Social Security number that is assigned to you. Now, if you are here, there was provision made when under President Reagan's first attempt at dealing with the illegal alien issues, to assign a temporary number to somebody who is not here and legally able to get a Social Security number. And so, but the Social Security number is a 9-digit number, 3, 2, and 4 digits respectively. Each individual that is a citizen of the United States receives a Social Security number, which when your child is born, for example, you have to go to the Social Security Administration and apply for one. When you come to this country as a legal immigrant from another country, you have to go to Social Security Administration and they will assign you a Social Security number. So that Social Security number identifies you as an individual, and the Internal Revenue Service uses that as the vehicle to be able to identify who you are. So, and then as I said, if you are here illegally and you cannot get a Social Security number issued by the Social Security Administration, the IRS will issue you a temporary identification number so that you can file tax returns and what have you. And let me just back up and say that in theory, you're not supposed to be able to work in the United States without a Social Security number, and you're not supposed to be able to work unless you're here legally. That being said, we have massive issues with our immigration system, and this was one of the issues that they tried to deal with under the initially under the Reagan administration back in the mid 80s. That being said, that means that if you are a business entity, then you also have an identification number, and that identification number is two digits, so it's still 9 digits, but instead of the format of a Social Security number, it is a format of 2 digits and then 7 digits to follow. So what is a business entity? Well, there are a couple of different ways to describe a business entity. Obviously, a business entity is an entity which is there to do business. As far as the Internal Revenue are concerned, or is concerned, there are 3 business entities traditionally that are looked at, and then subsequently, as I said in the last video, there's a 4th one that comes into play within the last, say, 40 years or so. So so you're either a sole proprietor. We talked about the fact that a sole proprietor is an individual who is doing business as an individual. And so they are a sole, meaning they are the single proprietor of the business. They show the income from the business onto their regular 1040 form via a Schedule C, and then they pay income tax on the activity of the business into their personal taxes and are taxed at a tax rate that is for an individual rather than a business. If you are an entity that has more than one individual, then you are what's called a partnership. And a partnership is can be more. It has to be more than one individual, but you come together and you operate with equal partners. Well, let me clarify and say not necessarily equal. What happens is your partnership should have a guiding document which will tell what each of the partners bring to the business activity. That being said, at the end of the year, when the business is finalizing its activity, instead of the income that is made by the business and the partners in the business be showing up on an individual return, it is put on what's called a 1065K1. And the 1065K1 divides up the income and deductions from the business activity of the partnership and sends that over to the partners for them to take and show on their personal tax return via a Schedule E and maybe a company schedules where they would take deductions. That said, the purpose of that, as I said, is it is a pass-through entity. So it is a business activity that is being taken and passed over to the individual to put on their individual tax return and then pay taxes at the individual rate. There is a third entity, then, which is a corporation. And a corporation is a business entity that stands alone. The corporation stands alone and is incorporated under the laws of the state in which it seeks to incorporate. So each state has laws which are put together for corporations to operate, and each state has different laws, but generally the laws are similar in that a corporation will have a board of directors, corporate officers, a constitution, and bylaws. And those things have to be filed with the state, and the state then makes a declaration that this corporation is incorporated within that state. Now, corporations are standalone in nature if they are a corporation. And a corporation can be many things. It can be a business. It can be that is a doing business for the purpose of obviously making income. It can be, for example, a nonprofit. You know, when you talk about libraries or churches or local governments or church organizations or housing associations, I mean, the list goes on, but there are certainly codes within the Internal Revenue Code, 501c3 and 501c4, which govern what a nonprofit corporation is. The nonprofit corporation still has to file with the state that they are going to operate within, and they first are a corporation, and then that information is sent over to the Internal Revenue, and if they are a nonprofit, they have to apply for recognition of their nonprofit status once they have that recognition provided to them by the Internal Revenue Service. So they too are assigned a employer identification number, and that is their identifying number that determines what they are. And what happens then if within the structure of the corporation, so it's called a C Corp, within the structure of the corporation, some corporations will decide that they would rather treat the income from the corporation under what's called Subchapter S rules. And a corporation can be any beginning year to ending year when it files. So it can be not under a calendar year. Remember, partnerships have to be calendar year. Individuals have to be calendar year. But corporations can be fiscal year. And so their year for considering taxation runs 12 months, but doesn't have to start in January. It can start whenever it's convenient for the business. So you'll find, for example, corporations that are in construction will oftentimes, begin in February and run until January. Or the government, their fiscal year runs from October to September. So they have a fiscal year, and because they have a fiscal year, they file their returns accordingly, normally following the pattern of by the 15th day of the third month following the end of their tax year. There is a provision, however, that a corporation can apply to be recognized as what's called an S corporation. And the S corporation basically divides up between the shareholders of the corporation responsibility for paying taxes on the activity of the corporation. When that happens, what happens then is that they then fall under the regular rules of being under a calendar year, and they file the income information for each of the shareholders as it's divided up via a return 1120 K1. And that then the individual receives an 1120 K1 for their participation in the corporation, and they add that to their tax return so that they can be taxed on the activity of the corporation at the individual rate rather than at the corporate rate, which if you look at the rates for businesses, you will find that the individual rates normally are much more generous than the corporate rate. And because of that, you will often find people wanting their business to be a Subchapter S business. So again, the regular corporation files a return 3.5 months after their fiscal year ends. A Subchapter S follows the rules of a tax year being January 1st through December 31st. And so, but again, they have an identification number, which is 2 digits and then 7 digits. Now, what happens is that in order for a corporation to be a Subchapter S corporation, they have to make application for recognition of that. So if you're going to have a corporation, the corporation comes first, and then you file an application for recognition of Subchapter S status. So when that happens, initially, depending upon how you file the request for Subchapter S status, there will be a corporation return required for the short year. Remember, the year for a Subchapter S starts in January, but your corporation may be on a fiscal year basis normally. And so there's a short year under the C Corp, and then your new year starts in the subsequent year. So that is a separate entity which can become pass-through, to the individual. So what are the pass-through organizations for business that people operate under? They could operate under a partnership agreement. They could operate under a subchapter S agreement, and those would pass through to the individual. And then if they're a regular C corporation, they file a yearly tax return based upon the type of C corporation that they are. Whether they're a regular business entity, remember it's an entity, so remember whether they are a regular business entity or they are under an entity under some type of special provision, such as a non-profit. And even a non-profit, depending upon what type of activity they have, are still required to file tax returns, even though they may not be taxed on the income that they're receiving based upon their special status. They're still required to file tax returns. So, and again, they get their, from the state, they're not filing as a nonprofit, and then once they get that, they have to apply for recognition to the Internal Revenue Service using the tax code that they fall under, whether it be 501c3 or 501c4 respectively. There's one other business entity which is a kind of a hybrid, and it became popular, like I said, 30 years ago, 40 years ago, that under each state law, there are what's called limited liability companies. Now, when you file with the state for your business activity, you have to state up front what it is that you want to do. You have to tell the state, because you're going to fill out a form which basically says, I want to go into business, this is the type of business I intend to be, and this is how I'm going to assert myself. So, for example, if you wanted to be you don't have to do that as a self-employed individual, but if you want to be a partnership or a corporation or an LLC, then you must file with the state because, of course, the state corporations divisions, they're going to want their yearly fee for your having filed with them. And so you fill out a form and you make a declaration. Your declaration is going to be, I intend to be a partnership or a corporation. If you're going to be an LLC, then you have to declare you intend to be an LLC. So for a number of years, there was controversy over how, as far as the Internal Revenue Service, LLCs were going to be treated. But it ended up being probably 20 years ago or more, a final decision was made. And what we're really talking about is within the business, who is responsible for the activities of the business as money is owed for either employment taxes or income taxes for the business. And what was determined is that they're going to take the normal existing businesses and establish for them their own separate entity, so that if you're a sole proprietor, you can be a sole proprietor under the LLC rules and still have everything be treated just as if you're an individual, but you're not going to be using your Social Security number. You're going to be filing as an LLC and have gotten an EIN from the Internal Revenue that you are an LLC. By definition, according to the tax codes and the way things are written, an LLC is by definition a partnership. So that means that the rules for a normal partnership for liability are going to be the same for an LLC, without getting into the weeds. But the bottom line is the activity of the partnership, every partner, with the exception of a a limited liability partner, which just have money in the partnership for investment. But every partner that is actively participating in the business is then liable for taxes and what is paid to the Internal Revenue in regard to employment taxes as well as business taxes. And then, of course, if you're a corporation, then the corporation also then falls under the LLC rules. And again, you're looking at corporate officers and what you have there. So that provides an explanation for you as to what is involved with business entities. So business entities have their own identification number. The purpose of the entity is to be able to establish by the Internal Revenue Service who is responsible for the taxes and how the business conducts itself. But the bottom line is with that being said, and I hope this is not too much in the weeds for you, but with that being said, the purpose, of course, is to establish, if you're going to operate a business within the United States, either as a entity that is a pass-through entity or a standalone entity, then we want to know who's going to pay because you have decided to play. Hope this has been helpful.